Tesla isn't just another stock, it's a phenomenon. It's a name that sparks excitement, debate, and even controversy in the world of investing. Everyone has an opinion, and for years, it's captured the public's imagination. Whether you're a diehard fan or a skeptic, it's hard to ignore the impact Tesla has had on both Wall Street and Main Street. Tesla is actively reshaping both the automotive and energy industries, from sleek electric cars to innovative solar solutions. The company is at the forefront of a technological revolution. Investing in Tesla means buying into a vision: electric vehicles everywhere, charging stations on every corner, and a world less dependent on fossil fuels. Imagine solar panels on every roof, turning homes into mini power plants and making clean energy accessible to all. And batteries stabilizing the grid, storing energy for when it's needed most, and helping communities become more resilient. This grand narrative draws in investors seeking more than just steady returns. They want growth, disruption, and a chance to be part of something transformative. The constant media attention fuels volatility, making Tesla a roller coaster ride for investors. Headlines can send the stock soaring or tumbling in a matter of hours. Massive rallies can happen on a single tweet, but so can sharp drops. The company's story is written in real time, often in 280 characters or less. For those with conviction, the rewards have been historic. Early believers have seen their investments multiply, riding the waves of innovation and risk. Tesla's high-risk, high-reward profile keeps it at the center of financial debates. Some call it overvalued, others see limitless potential. Today, on October 24, 2025, the Tesla story is still evolving. New chapters are being written every day, with each milestone and setback. The company keeps hitting milestones, expanding and pushing boundaries. From new factories to cutting-edge vehicles, Tesla refuses to stand still. To understand where it's headed, we need to look past the hype and dig into the real numbers and challenges. Only then can we separate the dream from reality. Let's break it down and see if the fundamentals still support the story, or if the star of the stock market show is ready for its next act. Let's talk numbers, because when it comes to understanding a company's trajectory, the story is always told in the financials. Every quarter, investors and analysts pore over these reports, searching for signs of strength or weakness. In Q3 2025, Tesla pulled in $28.1 billion in revenue, up from $25.2 billion last year, a significant jump that highlights the company's ability to scale. That's impressive growth for a company of this size, especially in a competitive and rapidly evolving industry. The automotive division remains the main driver, with $20.4 billion in sales, showing that Tesla's core business is still firing on all cylinders. Despite fierce competition from both established automakers and new EV startups, demand for Tesla vehicles is still strong and resilient. Year-over-year revenue growth is exactly what you want from a growth stock, and it's a clear signal that Tesla is executing on its vision. It shows Tesla is expanding its reach, strengthening its market position, and building a global brand that resonates with consumers everywhere. This upward trend is a key pillar of the bull case for Tesla, fueling optimism among investors and driving the stock higher. The numbers prove the demand is real and sustainable, not just a temporary spike or a passing trend. Of course, revenue is just one piece of the puzzle. We'll get to profitability soon, because that's where the real story unfolds. But strong top-line growth is the foundation for everything else, setting the stage for future innovation and expansion. Tesla's momentum is intact, providing a solid base for future growth and giving investors plenty of reasons to stay excited. Tesla isn't just about cars. Its energy division is quietly becoming a powerhouse. Solar panels, the solar roof, and battery storage systems like Megapack and Powerwall are growing fast. In Q3, the energy generation and storage division brought in $3.4 billion, up 42% from last year. This explosive growth shows Tesla is diversifying beyond vehicles, Global demand for energy storage is surging as renewables expand. Megapacks help utilities stabilize the grid, while power walls empower homeowners. This synergy between energy generation and storage is a brilliant business model. The energy business expands Tesla's total addressable market far beyond autos. Tesla is building the infrastructure for a new energy economy. This makes the company more resilient and gives it another powerful growth engine. Innovation at Tesla is fueled by massive investment in R&D. In Q3, Tesla spent $1.6 billion on research, funding everything from better batteries to full self-driving AI. This relentless focus keeps Tesla ahead of competitors. High R&D spending is a bet on the future, not just the next quarter. Projects like the Optimus robot and Dojo supercomputer could redefine entire industries. Tesla's commitment to innovation creates a moat competitors struggle to cross. The company isn't resting. It's building new products, markets, and revenue streams. While it may weigh on short-term profits, it lays the groundwork for exponential growth. This is the core of Tesla's identity and why its potential seems limitless. Leadership is focused on winning the marathon, not just the next sprint. Tesla's Q3 net income dropped to $1.4 billion, a noticeable decrease compared to previous quarters. That's down from $2.2 billion last year, which has understandably raised concerns among investors and market watchers. But it's important to recognize that this dip isn't random. It's largely due to planned increases in research and development, as well as the significant costs of global expansion. Gigafactories in Texas and Berlin, for example, require huge upfront investments before they can start generating substantial returns. These aren't signs of trouble. They're the necessary costs of scaling up production and expanding Tesla's global footprint. Restructuring efforts and one-time expenses have also played a significant role in the recent financial results. Think of it like renovating a house, costly and disruptive in the short term, but ultimately adding value and strength for the future. The dip in profit isn't because of falling demand or a broken business model. In fact, demand for Tesla vehicles remains robust. It's a strategic choice to invest heavily now in order to drive future growth, innovation, and greater efficiency down the line. For long-term investors, these are the kinds of trade-offs that can lead to bigger rewards. It's about seeing the bigger picture. Tesla's management is focused on building lasting value, not just chasing short-term quarterly numbers or headlines. Short-term pain for long-term gain is the strategy here. The fundamentals remain strong, and the future looks promising for Tesla. Even Tesla faces real-world challenges like supply chain constraints and regulatory hurdles. Global supply chains are still recovering, and even minor disruptions can slow production. Tesla has become adept at managing these issues, even building its own components when needed. Changing government regulations and fluctuating regulatory credits add complexity. Navigating different laws in every country increases costs. These challenges aren't unique to Tesla, but how it responds matters. Tesla's agility and resourcefulness help it weather these storms. These are bumps in the road, not roadblocks to long-term growth. Despite challenges, Tesla's management remains confident and focused on the long term. They see current issues as temporary hurdles, not roadblocks. Demand for Tesla products remains overwhelming. The challenge is meeting it fast enough. The plan: ramp up new factories, launch new vehicles, and expand energy products. The Cybertruck is set to tap into the lucrative pickup market. This clear, consistent vision from leadership provides stability for investors. Tesla isn't reacting to every headline, they're executing a long-term strategy. That unwavering focus is a powerful reason to believe in Tesla's future. Tesla's global strategy is all about scale. Building gigafactories worldwide, new plants in Texas and Berlin use cutting-edge tech to boost efficiency and lower costs. As these factories ramp up, Tesla's margins and profitability should improve. The company is scouting new locations to serve emerging markets. Gigafactory Shanghai's success is the blueprint for global expansion. This manufacturing network is a massive competitive advantage. Tesla is also scaling up energy product production to meet surging demand. Dual expansion in autos and energy makes Tesla's growth story unique. So, is Tesla a smart buy in October 2025? Despite volatility and a temporary profit dip, the long-term growth story is intact. The core auto business is strong, and the energy division is booming. Tesla is now a diversified tech company, not just a car maker. The market is focused on short-term costs, but the long-term rewards are huge. As new factories and products ramp up, revenue and profits should accelerate. For long-term investors, today is an attractive entry point. This isn't just buying a stock, it's investing in the future. Remember to leave a like and subscribe to the channel for more videos like this.